Hello and welcome. You're watching FII. I'm Rishika Barua. The Sensex has breached the 50,000 mark for the very first time on Thursday. From March 2020, the pre-lockdown crash to now, the Sensex is up almost 100 points. The beginning of the end of the COVID-19 pandemic, the wave of vaccinations across the country has given markets much reason to cheer. The RBI too has come out and said that the worst is over for the Indian economy. Today on FII, my team and I will try and break down for you what does this mean for you. Is your money safe at the moment? Is this all just a bubble? Will the winter glory last till the summer? We'll seek to answer some of those key questions for you. But first, let's take a look at why many experts at this moment believe that this is indeed Achhedan for the market. Well, what experts say, with a sense of cautious optimism, if I might add, is that COVID-19 cases in India are declining. This is a good thing. The pace of vaccination is also likely to boost confidence in the economy. Massive global liquidity may continue to support Indian equities. So why is it that markets are surging ahead of Budget 2021? We've tried to explain some of the key trends at the moment. My colleague Sakshi Bajaj has more.
As the markets continue their record run, with the Sensex breaching the 50,000 mark, the big question really is what to expect now. The spotlight is clearly on the budget and analysts believe expectations are high. Experts believe the focus of this budget is likely to be on manufacturing and a boost to Atmanirbhar Bharat. They also feel sectors like infrastructure, real estate, automobile are likely to be in focus along with taxation and policy changes. As far as the global trends are concerned, strong corporate earnings and the vaccination drive has been boosting sentiment. But really the big question now is, will we be able to sustain this momentum or not?
Well, that's the million-dollar question. Will we be able to sustain the momentum or not? And joining us to answer some of those key questions, we have Dr. Srivastava, the Chief Policy Advisor of EY India, Ambarish Baliga, market expert. We also have Akash Jindal, market expert and economist. So there are, gentlemen, several big questions that our viewers have sent us at the moment. One among them, of course, and let's sort of just start at the beginning. Why is it that markets are surging at the moment? What explains these trends? Mr. Srivastava, would you like to begin?
Well, several factors have joined hands, as it were, that can explain why this surge has happened. First of all, with Mr. Biden taking oath in the US, the investor sentiments globally have turned in favor of India. There is a surge, corresponding surge in the foreign flow of funds into India, and that is the most proximate reason for this. But secondly, there is a lot of expectation related to the forthcoming budget. And since the finance minister has been saying that this is going to be a unique budget, one in 100 years and so on, a lot of expectation is getting built around this. The third reason is that there has been some very good performance of some of the companies, particularly because of the pickup that happened in the third quarter. Right. Fourth is the anticipation of the base effect in the economy. And these are some of the reasons that have joined hands together in order to explain this upsurge.
Okay. I'll just rephrase this, Mr. Ambarish Baliga, if you'd like to come in at the moment. Many say that, the economy is still in a certain sense in a recovery mode. The economy is still trying to cope with the aftermath. A lot of businesses are still trying to cope with the aftermath of,
Right.
the pandemic and the lockdown. Why then in this context is the market surging? I think that's where, there's a question mark to this surge. Many believe, is this a bubble that's about to burst?
In fact, I believe it's a bubble because I find the valuations extremely expensive. And when we talk of India, it's just not the stocks which are listed, on the stock markets, not the corporates which are listed on the stock markets, but there are, lakhs of other corporates, smaller businesses which are there, which are still suffering because of working capital issues, because of demand issues, and quite a few of them are closed down and not many people are talking about it. I mean, what's happened in the last couple of months is the big boys have become bigger.
Right.
The smaller ones have actually disappeared or have, become negligible in terms of business. And I don't think I'll be wrong to say that quite a few of these businessmen have actually shifted to the stock markets.
Right.
Because making money in the stock market is much easier than doing business. Especially the smaller businesses.
Right.
And just to quote you figures, about 1 crore new investors have come in the last 11 months.
Okay.
And because of which we are seeing that huge liquidity. I mean, all of them have made money in the last 10 months. So because of which that confidence level is high, they are pouring in more money. And at the same time, if you look at the FIIs, they are getting decently cheap money because most of quite a few countries we have seen negative interest rates.
Right.
And what they're doing is they are doing a dollar trade. In fact, people are expecting that the US dollar will weaken over the next few quarters.
So you're essentially saying something contrary to what Mr. Srivastava said. You're saying that this is a bubble. Do you have then some kind of a broad timeline estimate of when this bubble is going to burst?
No, I mean, it's very difficult to give a timeline because of liquidity flow, a bubble can become bigger before bursting.
Okay.
And we have seen that in the past. But then, I'm saying it's expensive because you look at the P ratio, it's about 40x. It's the highest, I suppose, in the last 10 to 15 years.
Yes.
And if you look at the GDP ratio to the market cap, it's about 110%.
Okay.
A normal is about 75%.
Well, Nasir Salim is also joining us on the broadcast. Thanks for being with us. But let me first go across to Akash Jindal. You wanted to come in. Go ahead.
Yeah, see, I'm an economist. I'll give my views as an economist only. Yes, liquidity is there in the market. There is sufficient liquidity in the market, rather excess liquidity in the market, domestic liquidity as well as global liquidity. But on the other hand, economy is also recovering.
Right.
This year, the GDP growth is 11 to 12% as far as economy is concerned. Now, we are out of corona, vaccination is on, and the pent-up demand is showing its signs. People are going to the markets, people are going to the restaurants, people are buying, consumption is back. And again, what happens is our rival economies, if you see, whether it's UK, whether it's Japan, they're still impacted by corona.
Okay.
And US-India relations are improving with the new regime coming in there. So global money is also going to come in. So according to me, yes, it is excessive liquidity which is coming to India, Indian money as well as global money. But our economy is also supporting it. Our economy is a resilient economy and our economy has the capability to bounce back.
Okay, fair enough.
What perhaps the global investors are eyeing. That is what they are appreciating.
I'm going to request you to hold that thought right there, because we promised our viewers that we're going to be answering their questions on FYI today. So, I'm going to give Nasir Salim the very last chance to sort of, analyze this whole situation, and then we'll get down to the brass tacks. Nasir Salim.
Good morning, Ruchika. Great to be back on your show. I think, clearly I heard some of the panelists, well, it's a very mixed opinion that you have today. But I'm of the opinion that, look, let's understand this. There's about $17 trillion in negative interest rates today sitting in. When I'm saying that's the amount of money which is lying in global markets. Now, when you're looking at negative interest rates, you can imagine, Ruchika, it's basically saying that I'm putting my money in banks and they're actually not paying me any interest. As a matter of fact, I'm paying money on there by parking in money with them.
Yes.
Now, the point is that obviously this then looks for opportunistic investments. And there's very simple logic that India gives arbitrage opportunities to global players, to global economy investors, which will obviously attract flows in India. Now, given the fact that I must tell you, every boom that we've seen in the markets over the last 20 years, maybe even longer than that, has always been driven by a certain rally. That rally could be liquidity driven, it could be the IT stock market rally, it could have been the post-liberalization rally in 91, for example. Now, it's unfair to say that this could be turning out to be a bubble. I'll tell you why. The point is very simple. If you look at the Q3 earnings of 2019-20 financial year, and if you compare those to the current financial year, corporate earnings for Q3, just of the Sensex and the Nifty, if you look at some of those firms, they've actually improved in spite of a low base impact. Right? Because I think one of the panelists did say that it's a low base impact, but the corporate earnings and profitability have improved drastically. Number two, When that happens, re-rating has to happen, right? Obviously, earnings today, somebody said on the panel that it's about 40 times is looking at forward earnings.
Yes.
But if you look at historical trends also, and if you compare that to the earnings, if earnings start to go up, those valuations don't start looking at very expensive at some point of time.
Right.
So my point is very simple, Rishika. I think, look, we've gone through a very bad phase from a sense of fear now to a sense of optimism.
Okay.
We're looking at a positive outlook. I think some of the lead indicators, which we track as bankers and as planners, is that I must tell you is that, when we look at certain numbers like IIP,
right,
that started to show
okay,
positive
I'm going to come back to you on that, because I promised that this is going to be about answering the questions that our viewers have sent us on FYI. So let's begin with that. Sensex at 50,000, many would say is a dream. Mr. D.K. Srivastava, does this present an opportunity for investors at the moment? What would you like to advise them?
Yes, it is definitely an opportunity. And the critical question is whether this will last, and if this rally continues, how long would it continue at this level or above this? I think we have to take a relative view of what is happening in the rest of the world vis-a-vis the kind of opportunities that are likely to open up in India.
Right.
So the rest of the world, most of the European economies, the US economy, even the Chinese economy, I think are not doing that well. Whereas the promise that India holds, it is still a promise, but it's very much dependent on what will happen in the budget and what initiatives are going to be taken.
Right.
We are informed that this will be a spending-led budget and it will provide a big boost. The government has been waiting.
So would you then perhaps say that investors at the moment should wait and watch till budget 2021 to see how the markets respond to that?
Well, it's only a matter of another 10 days or so.
Yes.
So I think that they will start to take a call because market responds to expectations. And the expectations are formed on the information that is really flowing through in relation to what is going to happen in the budget.
All right. Mr. Ambrish, would you sort of agree with that assessment? What should investors do in the current climate? Should they just hold on, wait it out for a bit, or is there something that they can do in these coming 10 days?
In fact, since I talked about a bubble situation, in fact, I'm asking my clients to book out to a certain extent, take the profits off the table, and possibly hold on to cash for a while. I know it's very difficult to hold on to cash at this point of time, especially when you see the markets going up every day. That itch is always there to invest.
Yes.
But I think in times like these, it makes a lot of sense to actually sit on cash for a while.
Okay.
Like I said, the bubble is formed, it can grow bigger, but then I don't think one should regret missing out, because when you see a crack post the bubble bursting, I think that crack could be quite sharp. And we have seen that a number of times in the past. So I think one should be a bit careful at this point of time.
Okay, so you're also essentially propagating a wait and watch, if I understand you correctly.
Absolutely, absolutely.
Okay.
And again, when we talk of budget, there could be positives, but at the same time, people are clearly expecting that there could be a COVID tax. One needs to see whether the COVID tax is only on the super rich or whether it's going to be across.
Okay. That's interesting. Akash Jindal, do you want to come in here? Many of our viewers have actually asked this question. What are the kind of long-term stocks that one can hold on to? And I think that's an interesting question, especially at a time when, experts on either side of the spectrum, those who believe that, this is a very genuine surge in the markets, even those who believe that this is a bubble, everyone's sort of advising a bit of wait and watch. It's a bit of a cautious approach.
Yeah, see, I wouldn't advise on any specific stock, but in general, I would ask the investors in general that they should hold on, because there's great growth expected in Indian economy. The growth and recovery have just started. I think by the middle of this year, we'll realize that we'll be again the fastest growing economy amongst big economies. And that is what's going to boost the sentiment. And anyway, stock market is an instrument for small investors to be there in for long term. Plus budget also, I think there's lot negativity already that we had a negative GDP growth, there's a high deficit, but I think there can be many positives in the budget, because I think this budget is going to make some decent announcements as far as the economy is concerned. And globally, since we are performing, I'll reiterate, much better than our rivals, whether it's Europe, whether it's US,
Right.
whether it's Japan,
But
or even
what-
China. So
Right.
I think in long term, India growth story is intact, and the growth story in long term would definitely see through that our markets perform in the long term.
So what are
in
some of the
general,
long-term stocks that one should hold on to at the moment, Akash Jindal, broadly?
See, I'm an economist, so I can't speak on specific stocks.
Okay.
I can't talk on any specific
But specific
stocks.
sectors,
But
Nasir Salim, do you want to come in there?
Rishika,
Because
I
these
like
are very
to- I like to
specific
talk.
questions for the interest of our viewers. What should one sell at the moment, and what are the long-term stuff that one should hold on to? Long-term
No,
stocks that one should
sure.
hold on to.
Sure. So Rishika, I'll avoid stocks, but I'll give you sectors.
Yes, sectors,
But,
yes.
but before that, before I get into that question, I just want to answer the part that you asked some of the panelists saying what should they do and for your investors.
Yes.
I think I have a very three simple prone strategy, which is very, very simple. If you need money now, short term, please book profits.
Mm-hmm.
If you do not need any money, if you have a horizon which is longer than 3 to 5 years, sit tight. Don't do anything. Continue
Okay.
to hold on to your equity investments. Just ensure that you're in the right set of funds, sectors, stocks.
Okay.
Right. That's broadly the theory that we are at least propagating.
Right.
The second thing, I think, as far as sectors are concerned, I think sectors which we are going to benefit and look at disruption. And I would say technology, for example, is something which is going to be disruptive in nature. And today, by virtue of investors, they have the opportunity to look at sectors such as digital, the entire technology space, the digital
Right.
space ecosystem is very, very interesting. The second quick one is a function of QSR, which is quick service restaurants, right? We're looking at some of them really doing well
Yes.
in terms of their turnovers as well.
Yes.
There is pickup and delivery services available
Yes.
that's going to further push up, and the entire digital ecosystem supporting that chain is also going to help get very good returns and an opportunity there.
Right.
Right. The third one, I think, of course, is again very, very cautiously, I would look at some of the IT and banking-led stocks. I think those are very, very interesting to play. For example, some of the larger banks that one can look at
Okay.
in terms of a cleaner balance sheet. Those are something which definitely one can look at and
Okay.
do merit some exposures at a
So
portfolio level.
you're essentially saying that book profits if you're in it for the if you're in it for the short term. So make hay while the sun shines. But if you're in it for the long term, then you need to hold off for a while and see how this plays out. That's a very
And
interesting
one
thing.
last-
So
yeah,
do
and
what's
one last
best for
thing.
you, basically.
Yeah, no, Rishika, and one last thing, of course, as far as the sectors are concerned, I forgot.
Okay.
Diagnostics and healthcare. I
Right.
mean, that is something
Of
which
course.
is going to completely rule our lives. And I'm not saying pharma. Pharma in itself could be a little complex because, valuations and there's,
Yes, yes.
there's FDA requirements. And,
I think that's crucial advice. Yes. I think
Exactly.
that's
But the
crucial
point is,
advice.
I think healthcare and diagnostics is something which one can look at.
So healthcare, diagnostics, but not so much pharma. We're completely out of time at the moment, but I want to get in very quick last comments from all of our experts on will the markets continue to rise? I think this is the million-dollar question that a lot of our viewers have asked. Mr. Srivastava, would you like to go first?
Well, there may be some pauses or corrections, but
Yeah.
those would be temporary.
Okay.
The long-term story is going to be very robust, particularly for India. And even globally, the one positive outcome of COVID is efficiency and cost cuts.
Right.
So the entire output structure is now slowly shifting towards IT, financial services, banking,
Yeah.
health services, and so
Right.
on. And therefore, the long-term story is going to be intact. One has to be careful with in terms of short-term corrections, but long-term, I think investors can feel optimistic.
All right. Akash Jindal, you wanted to come in?
Yeah, I think yes, there could be short-term correction going ahead, but long-term, if you take a 2-year period, I'll be very specific. I expect decent returns for investors in general because the long-term India growth story is definitely intact. And my rating as an economist is, apart from what my friends have said, is that our GDP growth is going to be much, much higher. At least 80% than rest of the world in the coming 2 years.
I have to
And
give
that is
Mr.
going to
Amrish
impact
the
the
chance to
economy and
respond
markets.
because I know he might not completely agree with what the rest of you have said.
No, I mean, see, a long-term story may be intact, no doubt. I also agree with that.
Right.
But then the markets have gone up nearly 100% from the March
Absolutely.
lows.
Yes.
And I think for FY22, the expectations I think are already discounted to a very large extent with this sort of a move. So possibly the next 2 or 3 quarters could be a bit difficult for the markets. We could see a correction, could be a sharp correction also in between. And from a market perspective, I would say that whenever the markets crack, I think that's a good opportunity, because someone who bought in March is today sitting on nearly 100% profits or maybe more.
Right.
But someone who's bought in January 2020 is sitting on actually a small profit. So from that point of view, I've been suggesting my investors to actually book out to a certain extent, sit on cash, wait for the opportunity and buy back again, because the long-term story, if you're talking of the next 3-5 years, I think the long-term story is intact.
Right. Nasser Salim, I have 10 seconds.
I would suggest none of this in terms of sitting on cash. I would say just go out, invest in the market, review your risk profile. And if you look at equity investments, please look at a staggered manner through an SIP or an STP. You can do an SIP in stocks, you can do an SIP in individual funds. So I think don't shy away from equity if you have the risk appetite for equity.
All right. So, well, I think you've heard all the different points of view. We hope that this has helped you to make up your mind about this fabulous 50,000 run that everyone's so excited about. Thank you all very much for sparing your time. We really hope that this edition of FYI has been useful for our investors. Thanks for watching.